Good morning, Steve here in Chicago with the morning grain comments. Well, I hope everybody had a nice weekend. Certainly is interesting in August, where the U.S. Midwest is mostly dry and cool for this time of the year. It doesn't look like we're going to see a lot of rain for the Midwest into the weekend, where we could see showers across parts of the northern Corn Belt. Early next week, we might get a few sprinkles and maybe 3/4 of an inch of rain into central Illinois, which farmers need very badly, with a great foundation of a record corn and soybean crop, but they need rain to finish the crop off. As far as prices are concerned, beans have rallied close to that 1060 area on the November, partly because the old crop soybean carryout might be tight. We're looking at not a lot of farmers selling, and the crushers are still looking at good crush margins, although the exports are expected to drop. We did see one group lower their crop estimate of beans at 81 million bushels, and the carryout 105 million bushels down to 398. So that's not as bearish, but they are still looking for a low at harvest in nearby soybean futures of 835. Meal down to 235, and then a gradual rally in 2026 into May and June of soybean oil to around 59 cents a pound. Over in the corn, you've got corn down up 2 cents at 414. Again, I think the pro farmer yield is probably supportive underneath the market. We're also competitive, whether it's the P&W, the Gulf, or the Lakes for buyers, and we're going to see a good corn export demand, but we're also going to see a record corn crop, and the fact that Pro Farmer estimated the yield at 182.7 versus the government's 188.8 is probably offering some support underneath the corn market. Still, this one group increased U.S. Corn crop about 580 million bushels, which increased the carryout closer to 2.75 billion bushels, and looks for a low at harvest around the 340 area nearby corn futures. In the wheat market, we're up 2 cents in Chicago at 529. Here again, it's rare that even in big supply years that the wheat market does not make a seasonal bottom in September. We're looking at crop a little bit smaller than last year. The carryout maybe a little bit higher, but exports also a little bit higher than last year. So the wheat market probably is in a trading range. The lower end of the trading range might be in the $5 area nearby wheat, and the higher end of the range could be in the 550, 560 area. Outside markets, still waiting to see if the Fed's going to reduce rates in September. We're also watching the global economy and whether or not we're in kind of a weaker economy mode because of higher tariffs.